Will we see a stock market crash bigger than these three biggest stock market crashes in US history? This is not a prediction, but let me know if you think we'll see one as bad as these anytime soon. Number 3, the dot-com bubble crash. In the 1990s and very early 2000s, the rising popularity of the internet, have you heard of that, led to people investing huge amounts into new internet companies nicknamed dot-com companies. And speculation drove their stock prices up until the beginning of the year 2000. Right before the crash, does this sound familiar at all? 17 dot-com companies purchased Super Bowl ads for the Super Bowl in January 2000. Was there a theme to Super Bowl ads this year? And less than 2 months later, the bubble burst. Starting in March 2000, and for the next 2.5 years, the NASDAQ, that's the stock exchange that a lot of the dot-com companies were listed on, lost over 75% of its value. But as terrible as the dot-com crash was, since it was mostly the tech sector, it wasn't quite as bad as number 2, the 2008 financial crisis. This one's a bit more complicated. Honestly, The Big Short, the movie or the book, explains it way better than I ever could. But the quick list man guy explanation is that in the 2000s, banks started packaging home loans called mortgages into bundles that could be bought and sold by big institutional investors. And then banks created derivatives, or ways to bet on those mortgage securities. This led to a situation where if things went bad quickly, banks might not be able to figure out who owed who money, and they could begin to panic. And then in 2007 and 2008, things did go bad quickly, and banks did start panicking. And when banks panic, everyone panics. From October 2007 to March 2009, the S&P 500, that's the biggest 500 companies in the US, lost almost half of its value. That's half of essentially the whole stock market, not just mostly the tech sector like in the dot-com crash. But neither of those crashes come close to the number one worst stock market crash in US history, the crash of 1929. The 1920s in the US, known as the Roaring Twenties, were a time of excess, and that included excess financial speculation. From mid-1921 to September 1929, the Dow Jones, that's the average of the biggest companies in the US, rose from about $70 to a high of just over $380. That's more than a 5 times increase in under 9 years. That set things up for a huge crash. Wait until you hear the total percentage drop, and especially how long it took to recover. Starting on Monday, October 28th, 1929, known as Black Monday, the Dow Jones dropped 12% in a single day. Then the very next day, known as Black Tuesday, it dropped another 11%. And the market continued to fall for another 2.5 years. By 1933, this is almost unbelievable, the Dow was down almost 90% from its peak. But here's the even crazier part. It didn't get back up to where it had been, back up to $380 until 1954, 25 years later. Do you think we'll see anything like that crash again anytime soon? I hope not, but I'm List Man Guy. Follow me if you want to.